My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 20th, 2021, and Bitcoin is looking like it's in a correction. If you're subscribed to the channel, you will have heard me say this many times that price action actually tends to be in a corrective phase, right? Seldom are we in an impulsive phase where we're going up and down. That's where you make or lose money, right? Typically, price action is going sideways or chopping, right? So in an impulse, that is during the second wave or during the fourth wave, right? But between impulses, you do also have long periods of chop. And that is where, if you know what you're doing, you make your money, you make your entries, you plan your trades, right? You prepare for the impulses either up or down. And if you don't know what you're doing, that's where you grow impatient. That's where you jump into trades without knowing, where limits are. You don't know, any boundaries. So you don't know where to set stops. You probably don't even set stops, right? You completely get wrecked in these sideways trading periods, right? So it's very important that you grow accustomed to the patterns that price action plays out when we call during this sideways trading time, right? That's where you really kind of master your trading. When you get comfortable with the sideways action, you're able to read them generally well, right? You're able to read them with some level of fluency. So this is what we're going to do today. We're going to look at this fourth wave correction and see what Bitcoin is likely to be doing for the next however many hours that it stays in this fourth wave correction. And it's very likely a fourth wave correction. Why? Because, as I said yesterday, if you're in a trend, the end of the trend, meaning after 5 waves, you should have exhausted whatever trend you're in, okay? Meaning if you're in a downtrend, after 5 waves, you should have exhausted all of the selling pressure. If you're in an uptrend after 5 waves, you should have exhausted all the buying pressure, meaning the ABC correction, most notably the A wave, following that, right? Because after 5 waves, you always get 3 corrective waves. That A wave should be violent because there are no more sellers in our case, right? There should be no more sellers after wave 5 is complete. That A wave should be a bunch of buyers just waiting to buy that asset and push the price up. And we didn't get that, right? We got a very paltry, very tawdry kind of slow, methodical move up, which is indicative of a fourth wave, right? And we all know that according to Elliott wave theory, the fourth wave cannot exceed the 382 of the third wave, right? So we've got the fibs pulled from the top of the third wave to the bottom of the third wave, and here's our 382 marker. So this is likely going to be right here on this chart. It's about 59.777, 59.8, say. This is going to be our upper limit for this range for the next few days, if this lasts for a few days, as I anticipate that it will. And the bottom limit will, of course, be where it started, 55.7, right? 55.692 on this chart specifically. So that's basically what I'm seeing for Bitcoin. Now, we want to get specific, right? And one of the hardest things to do in charting is making time predictions, okay? And it's helpful, but it's difficult, right? It's difficult to say when. You might know what will happen. You may not just be able to say exactly when it will happen. But one of your biggest challenges as a trader, as a successful, profitable trader, or even in being a bad trader, right? One of the biggest challenges is time and patience, right? Knowing when to sit on your hands, knowing when to take the trade. This period is going to be up and down within this range, right? So if you don't know what you're doing, and if you can't read this, it's easy to get in a trade and then get stopped out because price action is likely to go to the top, back to the bottom, back to the top of this range, okay? So somebody who knows how to read the market, if you don't know exactly what these corrections are going to look like, you know it's a no trade zone, okay? Preserve your capital, wait until the next impulsive move down. But if you know how to read the market, you may be able to carefully get within a trade, within this range and trade the tops and the bottoms, right? Trade the top to the bottom, trade the top to the bottom. I'm not going to say that you should do that. It's very risky, but some people just can't not trade and they know themselves. And so they get into small, low risk trades during this time because they can't wait 3 to 6 days. Just psychologically, it's difficult for them, right? And part of being a good trader is just knowing yourself, right? And if you know that you're that type of trader that has to be exposed, has to be in a trade, then you need to learn these things. So this is what we're going to do this episode. We're just going to look at these corrections, okay? So first and foremost, let me erase this just to make it a little cleaner. First and foremost, if you're in an impulse, right, you know you have 3 positive waves and 2 negative waves. The 2 negative waves are your corrective waves, right? If you want information on the correction that you're currently in or you're about to go in, right? So let's say we want information on the 4th wave correction. Let's look at the 2nd wave correction. Why? It's because there's balance in an impulse, right? Elliott wave theory states that by law of alternation, if the 2nd wave correction was simple, the 4th wave correction should be complex and vice versa. Now, what does it mean, simple and complex? A simple correction means a simple ABC correction, and a complex correction means a WXY correction, okay? If you don't know anything about complex correction, double threes and triple threes, I welcome you. Just Google it really quickly and get a little bit of information about that, right? But practically speaking, a simple correction is shorter in time than a complex correction. And a complex correction can last, I've seen in my experience from backtesting, usually last about 3.5 to twice as long as a simple correction, okay? So let's see. This simple correction, this 2-wave correction, started right here and lasted about 4 days and 12 hours, okay? So that was the time frame, 4 days and 12 hours, okay? So let's say this is a simple correction. This is a simple A, B, C correction. If that is a simple ABC flat, then it's very likely that this is going to be a complex WXY. WXYXZ, or the 333 correction, is exceedingly rare, okay? But the WXY is quite common. And so if that lasted 4 days and 12 hours, which is what? Let me do the math really quickly. 4 days is 80, 96, 12, 98, 108 hours, okay? Then imagine twice, that's 216 hours, 3.5 times 96 is, I don't know. You do the math. I'm not going to do the math live. I'm not going to click out of this. But anyway, that's pretty much average what I've seen, right? So we're going to track it. And remember, if it is a double 3, what does it mean to have a double 3 correction? It just means that you have your W, then you have your X wave, and then you have your Y wave. And that is the 3 of the double 3 means that you have 3 waves in each of the W waves and the Y waves, and also the X wave actually. But the double is referring to the W and the Y, okay? So going on smaller time frames, let's see what we've done so far. Okay, on smaller time frames, you can clearly see that we have an A, B, C, okay? And that C is pretty much, here, we're going to get a little, well, we're going to get technical and we're going to get really precise. And you need to do this. And I welcome you, don't just watch this video. What you should do if you're learning and we're all learning all the time. You should always be learning. That's how you get better, right? Learning, trading, learning, trading, learning, trading. When you're not trading, you're learning. When you're not learning, you're trading. And when you're trading, you're also learning, especially when you're making mistakes, okay? Backtest this. Go through, find 5-wave impulses, look at the 2-wave and the 4-wave, compare the time it spent, try to identify which one is the complex, which one is a simple correction, and try and dissect it based on the information you have of the WXY and WXYXZ, if you can find a WXYXZ. Okay, A, B, C. If you're into traditional assets, gold was in a WXYXZ for years, okay? That's a hint. This is A, B, C. The C wave is a 5-wave impulse that starts here. 1, 2, 3, 4, 5. This is what I was talking about yesterday. I was in this long. I took profit at the top, okay? Now I'm out of a trade. I'm not exposed. So this is the W, okay? Now we're forming what should be the X, okay? And after 5 waves, you get 3 waves, A, B, C. What this looks like is a running flat, okay? For those of you who aren't sure what that is, please look it up. But a running flat is basically when your C wave doesn't exceed the endpoint of the A wave. So A, B, C. It kind of runs on you, okay? And again, the C wave is comprised of 5 waves, so we can count this. Let's go into smaller time frames. It's going to look like this. And let's see. A, B, C, D, E, I think, right? So basically, you're going to see 3 waves. You're going to see the running flat is going to have what you call a diagonal, a triangle, because in a corrective phase, it's called a triangle. And in a triangle, you have 5 waves correcting basically in a triangle, like it sounds. And each of those 5 waves are comprised of 3. So 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. I think that's it. So it goes A, B, C, D, E. That was the end, right? And you see that then it broke. So this is basically what you're seeing right now is that was A. You're seeing B, A, B, C. This should shoot up here, okay? You should see B, the B wave. I hope you're staying with me here. So this is the A wave after a correction, after 5 waves. This is the A wave. You got a running flat for the A wave. Now you should get a B wave, right? And you've A, B, C. That B wave should come between the 1 and the 1, 2, 3, 6 of this A wave. So if you take the top of this A wave to the bottom, you should get the B wave ending around here, okay? And that should be, and let's zoom out really quickly. 4-hourly time frame. And in this is for like serious traders. I apologize if you're just looking for price predictions, but this is actually where people make their money. When you have a good handle on this stuff, your read on the market is uncanny. And this is where you really kick the market's ass. You stop being a victim of the market's ups and downs. You'll still make mistakes, but fewer and far between, because you're able to take time and really make sense of these things. Why did I erase that? I wanted that. Okay. So basically, I expect this. Let's go on the hourly time frame. This is too zoomed out. Okay, so you've got your first phase of the correction. Oh, that's terrible. Let's break out the pen. it's going to look like this. A, right? B is going to come right to the 236 or a little bit before, and then it's going to go to the bottom of our range, okay? The C portion of B is going to go to the bottom of our range. So it's going to go A, B, C, most likely, right? That's going to be your X wave. So this is W, this is X, and then you're going to get a Y, and the Y can be, we know by the rules in a double three, W can be a zigzag or a flat. X can be a zigzag, a triangle, or a flat. Y can be a zigzag, a triangle, or a flat. So we expect Y to be a zigzag, a triangle, so it can be like this. It can be like this. So it can be like this, right? It can be a zigzag. It can be a triangle. A, B, C, D, E. Or it can be a flat. A, B, C, okay? And it will go to the top of our range. Basically, it has to, by the rules of the WXY, are that it has to slant, meaning, I'm going to erase all this. W has to come here. Y has to end before, W has to come up. X has to end before the start of W, and then Y has to exceed the beginning of X. So it basically has to create a diagonal in the opposite direction of the trend, basically in the direction of the correction. Does that make sense? So you're going to have a trend like this. So your entry point for the next wave down is going to be here, right? It's going to be the end of Y. And so when you're tracking this, it's not always to trade, right? My rules, and sometimes I break my rules, which is not good, but my rules for being a profitable trader, when I follow this, I am profitable. I beat the market consistently. When I'm in a trend, okay, when I'm in a trend and this is a downtrend, I do not trade against the trend. Okay, I can. I'm physically able to. I probably can. But if I want to make money, if I want to do this consistently, if I want to beat the market with regularity, my personal rules, you figure out your own personal rules, okay? My personal rules are that I trade with the trend. So the trend's down, I'm going down. I use these counter waves, these corrective waves to make entries, not to trade, okay? So if this took 4 days and 12 hours and this were to take 6 days or 8 days, whatever, according to my rules, will have to wait 6 days, 8 days, sit on my hands, and only get into the trade at the end of the Y correction, okay? And that is where exactly I'm going to get into the trade. Then I'm going to hide my stops behind the 382, which is around here, right? Because I know that the price cannot exceed the 382, and then I'm going to trade it down and take profit conservatively at the end of 5. Okay, so that's pretty much what I'm seeing for Bitcoin. This is why I'm seeing us being in a correction for 6 to 8 days. Now, I could be wrong, right? We've already done about 24 hours in this correction. Will it go for another 5 days? I don't know. Or 6 days? I don't know. But this is you heard my analysis, and this is why I believe that this complex correction can last quite some time. So that's pretty much it from me. I hope that was helpful. I hope that was useful. I love your comments. Welcome to all the new subscribers. Please like the video so more people can see this that are interested in trading, interested in charting, serious traders, serious chartists. And I'll see you guys tomorrow. Bye.